We also had the latest earnings out from Intel as well. Those shares are also taking a leg lower. For that, we go over to Yahoo Finance's Akiko Fujita, who's got those numbers. Hi, Akiko.
Hi there, Julia. Certainly a tough quarter all around for Intel, and you see that reflected in the stock here, down more than 10% in after hours. But let's start with the big headline coming out of this release here in the quarter, with the company saying that it plans to, it's reducing costs by $10 billion, a 15% headcount reduction that amounts to 15,000 jobs. Remember, we had just gotten that report from Bloomberg yesterday about the thousands of layoffs here. And this really is about the scenario that we've been hearing from Intel, significant investments having to go into the foundry business. And now, as a part of that discipline, the company announcing these significant cost cuts, $10 billion again. But let's walk through the numbers here in the quarter. A miss on revenue here, $12 billion. The expectation here was $12.95 billion. Adjusted EPS coming in at 2 cents. Estimate was at 10 cents. Looking at individual divisions here for the company, client computing revenue, which is, of course, the largest part of Intel's business. This is about the chips for enterprise consumer computers. That was a miss at $7.4 billion. The street was expecting $7.53 billion. Data center and AI revenue, that's one that investors have been watching closely, obviously, because Intel has really trailed some of its competitors, especially in its AI business. That coming in at $3 billion. The estimate was for $3.07 billion. And then the Intel Foundry business here. This is the one that has just been really capital intensive. And Pat Gelsinger, CEO, has really messaged this, saying that this is going to be a long-term investment. $4.32 billion here is the revenue coming in the second quarter. $4.47 billion was the expectation. And when you look at where things are looking in Q3, certainly not much better here. And I'll read you what Pat Gelsinger has been saying here, at least in the release. He says our Q2 financial performance was disappointing, even as we hit key product and process technology milestones. But second half trends are more challenging than we previously expected. We are leveraging our new operating model to take decisive actions that will improve operating and capital efficiencies. The company now guiding to an EPS of 3-cent loss. The expectation was for 30 cents a share. So, guys, I'm looking through the numbers here. I mean, the headline really is about that $10 billion cost reduction, 15,000 jobs now being cut. And again, this company really undergoing a multi-year transformation, but certainly not looking good, at least in after hours right now. When you look at shares, they're down more than 11%.
Yeah, and Akiko, something else to point out is the company, starting next quarter, is going to be suspending its dividends. So those who had been the Intel faithful, right, who were holding on for that foundry business after the long capital-intensive build-out to bear fruit, they were getting a little carrot there to hang on, and they're not going to be getting that carrot anymore as of the fourth quarter, because it seems as though Intel feels it has to take these steps to preserve cash.
Yeah, I mean, you bring up a good point there in the suspension of that dividend, certainly significant for shareholders here. But look, Pat Gelsinger has been messaging this for some time, in recent weeks. He was, speaking to another network, saying that essentially that 2027 is when they expect to break even on the foundry business. As you know, Julie, this is not an overnight turnaround. And this is a company that is trying to go from fabless to foundries and invest significantly there. So it's going to take a lot of patience on the part of shareholders. But you're certainly right. That carrot was there in terms of the dividend. Now that being suspended, as well as Intel really, again, tries to balance these costs for the long term with where things are with the business right now.
Yeah, definitely. Thank you so much, Akiko, for breaking that down for us. Appreciate it.